In this video, we're going to talk about the Solo Roth 401k calculation. Now, this is if you're a Schedule C filer. So if you have a side hustle or an LLC, sole proprietor, independent contractor, you might be eligible to put money into a Solo Roth 401k. And there is a rule change that I talked about on a previous video for the Solo Roth 401k, where you can still open and fund to make those contributions for 2020 while you're still in 2021, but before you file your taxes, including extensions. So go ahead and check out that video as well if you haven't already watched it. But I'm going to go through the calculation for that Solo Roth 401k in this video. And I'm going to go through 3 separate examples to make sure that you're maximizing the amount that you can put into that Solo Roth 401k. But before we do, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, Certified Financial Planner, helping you reach your financial goals. So the walkthrough or the worksheet that we're going to go through today is from the IRS publication 560. And I'll put a link in the description at the bottom so you can go ahead and print it out, do the calculations yourself, save it for your own records, but also so you can go through publication 560 if you have any other questions. But of course, if you do have questions, let me know in the comments down below. So the 3 examples that we're going to go over in this video is somebody that's earning $100,000 net profit on their Schedule C, $12,000, and then I'm going to talk about how much is the minimum that you need to earn in order to maximize your Solo Roth 401k. So let's go ahead and go through the walkthrough on starting with $100,000. So this is the worksheet and it's on page 24 of publication 560. At the very top, we're going to enter in our line 31, which is our net profit. And that's going to be $100,000. So here's where we're getting it from. We're going to the Schedule C and we're going to scroll down to line 31. That's what we're going to put in there from our Schedule C. And there on line 31, it's $100,000 for this walkthrough. Now, the next number that we're going to want to pull is entering your deduction from self-employment tax on Schedule 1, line 14. It's also on your Schedule SE, your self-employment tax, and it's going to be right here at the bottom at $7,065. So I'm going to put that in there, $7,065. But we can also jump up to our Schedule 1 and see line 14. It's the same number right there, $7,065. That's 1/2 of your self-employment tax. So now on step 3, we're going to go ahead and subtract that. So 100,000 minus our 7,065 is 92,935. 92,935. So this is the important number right here, our net earnings from self-employment. This number has to be over 19,500 in order to max out your Solo Roth 401k. Then step 4, enter your rate from the rate table, the rate worksheet. The maximum you can do is 0.2 or 20%. And this is going to be on the next page of that publication 560. So if you scroll down to page 25, you're going to see this right here. This is the rate worksheet. And it is a formula, but it's doing it for you like a little cheat sheet because you're self-employed and you have to account for the self-employment taxes. It just gets really complicated. But the maximum amount is from 1 to 25%. So 25% being the most, that multiplier then is 0.2. So that's how it's done. I've done that calculation on other videos. If that didn't make a whole lot of sense or you want to ask a couple of questions about it, let me know in the comments down below. I can go in more depth, but I have done it on other videos. If you want to get a little bit more technical or complicated on it, then you can. But if you want to max it out, it's 0.2. So just use 0.2. In all the calculations I've done, I've always used the maximum amount in order to do this calculation. So 0.2 is the maximum that you can use. Now, step 5, multiply step 3 by step 4. So step 3 is our 92,935 times 0.2 is our 18,587. I had an extra 0 in there. So let's do that again. 92,935 times 0.2 is 18,587. 18,587. So the next step is multiplying 285,000 by your contribution rate, which will give us 57,000. The reason that we're using here 285,000 is that's the maximum amount that you can include in any of the calculations for qualified retirement plans as far as the compensation goes. So if you used a lesser multiplier, so less than the 0.2, then that number is going to be smaller. So the 57,000 is the max that you can put into all retirement plans at work. So this is if you have another job or you have a W-2 income and you also have a retirement plan, then you have to account for it going through this calculation. So that's where this number is coming from. And that's why it's 57 here. And you'll see it right down there. It's 57 there because that is the max contribution. So if this number was smaller, again, it would be another one of those caps that you're going to deal with. But for this walkthrough, it's going to be 57,000. Enter the smaller of step 5 or step 6, and that is going to be our 18,587. So that's where we are right now. Now we're going to scroll down on this page just a little bit, and we're going to go to step 9. So step 9 is enter your allowable elective deferrals for your Roth contributions. So right here is where we're going to enter in the amount that we're going to contribute into the Solo Roth 401k, and that is going to be $19,500. Now, if you have other retirement plans, you also can only max it out at $19,500. But if this is your only retirement plan, the max is then $19,500. So step 10, we're going to jump to step 10, would be subtracting our 57,000 minus 19,500. Leaves us with 37,500. So what we're looking at here is this will equal 57,000, and this is the maximum we can put into all retirement plans. So the reason we're going to continue this calculation is so we can figure out how much we now can put into the traditional solo 401k side. So you're going to have two accounts if this is the example you're going with, 100,000. But further in the video, I will go through an example if you have less than the maximum amount that you can put in and what is the maximum amount. So we're going to continue on our calculations. So step 11, subtract steps 9 from step 3, and that's going to give us 73,435. So where do we get that math? So that's going to be subtract step 9 from 3. So in step 3, we had $92,935 minus step 9, which would be our $19,500. That gives us our $73,435, as you can see right there. We'll put it there. Then we're going to enter in 1/2. So divide by 2. That's 36,717.50. Enter the smallest of step 7, 10, or 12. So step 13 for this walkthrough is going to be 18,587. Then subtract step 13 from step 3, and that is step 14. So that's 74,348. 74,348. So again, that math is our 92,935 minus step 13, which would be our minus 18,587. 18,587. Come on. 18,587. And that's our 74,348. Sometimes these keys stick a little bit. Okay, so step 15 is going to be our 19,500. And it's entering the smaller step 9 or 14. So step 14 or step 9. So 19,500 is our smaller number. We're going to put that in there. Now for the next section is our catch-up contribution. So you have to be 50 or older in order to do the catch-up contribution. I'm not going to do that in this walkthrough. I've done it in other videos. If you have questions about the catch-up contribution, let me know in the comments down below. But I'm just going to go ahead and highlight that really quickly, our catch-up contribution. So we can skip down to steps 19. So 19 is now where we're at. So on step 19, we are going to add step 13, 15, and 18. So 13 is our 18,587. 15 is our 19,500. And then 18 was our catch-up contribution that we didn't go over. So we're adding those two up. That's going to be $38,087. So now enter the amount of the designated Roth contributions included in step 9 or 17. 17 would be the catch-up contribution that we could possibly have put in. But again, we skipped that. So we're going to put on our $19,500. That's going to leave us with our $18,587 that we can deduct. So deductible is your traditional side to your solo 401k. So we can put in $19,500 into the Roth, which is not deductible. It will not reduce your adjusted gross income in the year that you're making that contribution. But the $18,587, that will go into the traditional side. So you can put quite a bit of money into your solo 401k with the Roth and still get a ton of money into the traditional side. Now, this is the example for $100,000. I want to show you an example. I'm not going to go through all of this math to show you this example because I've already worked it out, but I want to show you what it looks like if we go through side by side with an example of $12,000. Now, if you have a net profit of $12,000, and the reason I chose this number is because there was going to be another cap. That's because you're below the $19,500 for the net earnings from self-employment, and that's this number right here. So the $11,152 is then the maximum amount that you can put into the solo Roth side. But that means if that's the case and it's below, then it's not going to leave us with any other money to put into the traditional side. So if you're below that threshold, while you can put in a bunch of money into the Roth side of your solo 401k, you're not going to be able to have anything left if you're below that threshold and you're trying to max it out. And the last example that I worked through was just looking at what's the maximum amount or the minimum amount on line 31 that you have to have in order to get $19,500 into your solo Roth 401k. And that number is $20,982.50. And that will work out to exactly $19,500. So that means you can max out your solo Roth 401k if line 31 of your business says $20,982.50. Now, you don't need to submit this worksheet to the IRS or with your taxes or to even your broker dealer where you're making the contributions, but it's a good idea to keep it for your records. So if there is ever a question, you can pull this sheet out and figure out exactly how you got to the number in making the contribution. And of course, if you have any questions on this, let me know in the comments down below. And if you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.